Guys, so continuing from where we stopped, guys, we're looking at the Thursday chart, and this is what the 19th of October. Remember, guys, I use very simple tools. I use my Fibonacci tool, okay, and trading sessions of the day, and then the rest of it right here is just my personal coding, okay. So looking at the market again. Remember, we just want to know what the time of the day. We want to trade with the time of the day. Mine preferably is where the London trading session, London and the New York. So if I make some profit off the London, I ain't going further, okay, because I just want to be profitable and I just want to get my money off the market and leave. All right. So with that in mind, okay, the next thing we want to do is we want to know the market structure, what the market is doing for that day, not what it did the previous day, what it does for that day. So guys, if I see a move like this, market coming from the from a high to a low, maybe during the Tokyo session, I want to trade. If the market coincides at the London session right here, I want to trade a corrective move further to the upside or so, and then I expect that at the point which should coincide with a level on the Fibonacci tool, okay, I want to see the impulsive move, the continuation, all right, on the downside. Okay, now guys, what do we have in the market of the day being the 19th right here? Okay, we saw the market coming from where? From the high to the low, but before the London session, as you can see, the market went up, so it's still coming from this way. You can see what we have here. Okay, let me place this correctly from the high to the low. Now guys, remember, at this point here, you can see that the market has already reacted with this very key candlestick pattern. I usually advise traders before coming to my channel, at least you should know some basics about trading, like candlestick patterns. Right here, you can see what we can call this is a hammer. Okay, it's a bullish hammer, and the market is kind of going upwards. All right, these three patterns right here indicate that the market is gaining momentum. However, some traders may be tempted to enter a buy trade here. Will you make profit? Yes. However, you're going to wait for a long time. Most traders get discouraged when they see a kind of move like this. So yes, probably it's going to hit your stop loss. All right. So what I do is that systematically, guys, I've seen a market coming to the this way, and I've seen a market making that corrective move to the upside. All right. And as you can see right here, the ending of that relapse, you can see the market collapsing here. The market reacted very well, so I traded where the continuation moved to the downside, the impulsive roll. All right, and I'm going to show you exactly how I did that right here on the chart. Okay, now you can see at this point, guys, right here, this was where I entered the market at the beginning. You can see how it began, from this point right here. At the market right here, the market began where? At the beginning. At the beginning of the London session. All right, we have here, this is what we saw. So this was exactly where I entered my trade. Okay, entering my trade here, guys, I set my stop loss somewhere above the 100. Why do I set stop loss of this margin? You may want to ask yourself. Now, because the market is not setting, you're not setting up the move, guys, I want to leave some allowance. All right, say imagine I enter this trade here and I just set my stop loss maybe 3 pips or thereabout. I would have been gotten out of the market before seeing the market move in my preferred direction. So I don't want that to happen. Okay, so guys, simply set my stop loss quite away, leaving some amount, leaving some distance, to play around with, so just some buffer, so at this point, guys, right here, this was my target, the 0 level, because if it's an impulsive move, definitely it has to hit this point. All right, did it hit the target? Yes, I made profit off the market in the sell trade. I made the sell trade and made a very good decision, got off the market, and voila, off. All right, so that was exactly how I traded for that day. Okay, and then did I go forward looking at the New York section and all that? No, I did not. Okay, so let's look at where the big day, the Friday. So this was on the 20th. Okay, so on the 20th of October right here, guys. So the same very interesting move, very interesting pattern right here, guys. You must attest. And right here, what we see is that the market, yes, from the upside, it came to the downside. So yes, market is making a move to the downside, to the downside. Now, like I said, guys, now we don't expect, the market is not a perfect one. Yes, right here with my concept, I should have been expecting a move like this from a high to a low, expecting what, a retracement to either of the Fibonacci 2 levels, and then an impulsive move further to the downside. But then, like I said, you don't know what the market has in place. If you look on this side, you can see that the market right here made an extended move to the upside. Sorry, I don't want to make this complicated, but let me just state this as a matter of fact. You know, the market went here, it broke some form of structure right here. You can see the market broke that daily high. It broke the daily high right here by this move. Let me highlight it right here. It broke the daily high. It broke the daily high right here. You understand? And then we see market coming backwards, all right, to this point, not breaking this low, you know, before this move. So the market right here formed what we see and what we know as what, a double bottom. So yes, it went to the upside. But then leaving that out of content, guys, I just want to make my little profit and leave the market. Okay, so with that in mind, guys, how did I trade this market? Very simple. I go right here, my Fibonacci tool, and I placed it right here. Okay, the lowest point. And at this point, guys, I'd already seen some basic bullish candlestick formation. I'm going to highlight it for you. Right here we have this as what? This is not a hammer. We have this as what we call, guys, as what we call a doji. This is a doji, but this is more like a gravestone doji. Okay, now the gravestone doji, it indicated what, that the market was, you can see that buyers are on this point and buyers are pushing the market to the upside. Now leaving this, if you look at this green candle and this red candle before this move, these three candles together make up what we call what, the morning star candle. Okay, now the morning star is a three candle formation that indicates what, a bullish sentiment in the market. And yes, you can see after that the market made what, a bullish move to the upside. So this is just like, you know, basic candlestick formation patterns, technical analysis that I believe most traders are cognizant with. Okay, now I came here, this was where I entered my trade. Okay, set my stop loss below as always, and then I targeted my take profit. I targeted the 61.8. okay, now I targeted the 61.8 fib level. And yes, did I make profit? Yes, you can see it right here, guys. You can see it very well, clearly. And in fact, guys, I made a screenshot of the trade I took on this particular one though, but I think I shared it on other channels. If you want to access it, guys, you can follow the Millionaire Logistics on Facebook, Millionaire Logistics on Instagram. We're also active on TikTok, Millionaire Logistics. But basically, guys, you need to subscribe to the channel so you can benefit immensely from it. And the YouTube channel, as you know, if this is your first time coming across the channel, this is what we do on the normal, this is what we do regularly, and it's best, guys, and we love and appreciate you if you can subscribe and follow us actively, and also learn a thing or two that will be helpful in your trading. Thank you very much. See you next week.